We are now going to begin our final session. This is a keynote on the evolution of digital business and policy in India. We have a treat from New Delhi is Nikhil Pahwa. He's an Asia 21 young leader. He's going to speak for about 30 minutes and then take your questions. So please, let's give a warm welcome to Nikhil.
Thank you. I realize that this talk is going to begin at the exact point in time where my jet lag hits me. But hopefully I'll survive it. Thank you, Margaret, Natalie, Rexil, and Rahul for bringing me here. And it's interesting to go through the last few panels and the talks to get a different sense because, you know, from my vantage point, I look at India very differently. We're looking at it from the inside in. And as a journalist and a reporter, I've been covering this space for the last, 16 years now, beginning with the Naukri IPO, then moving on, which was a watershed event because it indicated that Indian tech companies can be profitable and they can IPO. Of course, we've had a bit of a setback in the last few months with many great IPOs tanking with Paytm, Policy Bazaar, Nykaa, and Zomato. But it is still possible. Naukri is still profitable. We've also had, I think one of the most important events that took place in the evolution of the Indian internet was actually the launch of Flipkart. They built trust. Customers got what they ordered from e-commerce, and that enabled a transfer of money from e-commerce to advertising because there was a direct route to transactions, and that to content. Content and commerce brought more people online by 2010-11. And then we had a brilliant moment where Rajan Anandan, who was then the MD of Google India, went on stage at a time where we thought there were only 55-odd million internet users, and he said there were 100 million. Now, Rajan is a great sales guy. I don't know if he was actually telling the truth or not, but that and his subsequent statement a couple of months later where he said that YouTube in India is bigger than MTV, again brought a lot of ad dollars to the space and helped it grow. The other pivotal moment was the launch of Jio, low-cost, high-speed broadband that basically killed a couple of other operators but brought very, very fast, cheap connectivity, 6 months of internet free. No, I don't think that's been done anywhere else in the world. I mean, I've been in taxis where the taxi driver was watching a movie while driving. It's just scary in Bangalore. But you know, it had an impact, and that impact is still there. We have about 890-odd million internet connections in India. 790 are broadband. We have the cheapest broadband costs at 9 rupees 97 paisa per GB, as per the latest reports by TRAI. Most of it is wireless, and we have 5.5 billion. Over 5.5 billion UPI payment transactions a month. Demonetization helped UPI, even though it didn't help many others. But for the payments ecosystem, that was the moment. There are themes that I want to talk about, and they're slightly disparate, so I'll run through them one by one. They may not necessarily be connected, but to just give you a sense of what I'm seeing and what I'm hearing in my conversations. And then I'll come to challenges, some of which were explored in the previous panels. Firstly, I think there's a sense and a focus in the startup ecosystem now about building for the next billion users. And you're seeing more and more businesses try and jump over the literacy barrier. Because if you have to go beyond 100, 200 million user base, video and voice are going to be key. And that's something that Google, when it launched its NBU, focused on with voice-based search especially. But it's something that TikTok really made happen in India. We haven't seen that transition. You know, once the Chinese apps were banned in India and TikTok was banned, we thought there would be a seamless transition to some of the Indian competitors that have popped up to try and take advantage of that ban. But like a product manager friend of mine told me this great story about why TikTok was so special before it got banned and why some of the Indian guys haven't really caught up. And he spoke with a local celebrity in the town of Bikaner in Rajasthan, and she absolutely hated the new apps. She preferred TikTok because the new apps were essentially catering to, were showing her videos to people around her, in her neighborhood, in her city, in a small town that is, right? And for her, it was an invasion of privacy. She preferred being seen by those outside of that small town because they couldn't call her mom up and tell her, you know, your daughter's done this video, et cetera, right? So I think that cultural aspect is something which we ourselves seem to lack, and there needs to be deeper research and a deeper understanding of what an Indian user wants. Quite often we are driven by what we see happening in the West. I remember one of my first conversations when I started MediaNama, which was, you know, just in 2008, around the time the downturn, a short downturn was beginning, and I went to meet a VC friend of mine, and he said, why don't you do research? If you had told me 3 months ago about what the Indian opportunity in a Groupon clone would be, I would have paid a lot of money for it because I have to pitch it to others, right? But that mentality is changing, and that's evolving as we begin to understand our users better. And one of the best things that's happened over the last 2 years, I think especially, is that it's becoming more and more important and lucrative to become a product manager in India, which wasn't the case. We were scampering around for product managers about 3 or 4 years ago. Gautam would know something about that. But we still need to develop an Indian design language, an Indian approach to usability, UX. Crypto, for example, has no UX for Indian users today, even though there is a sizable amount of Indian users who have 100 rupees in various cryptocurrencies, and probably they're worth about ₹1 now, but you know, they still did make that investment. I think from a finance sector perspective, one interesting trend that we're seeing is the ability to lower the cost of participation. Why crypto worked when the advertisements were happening around the IPL was because they told people in small towns that you can invest in crypto at 100 rupees, you know, a month. And that's what also scared the Indian government, because there's such a vast number of people that were investing 100 rupees monthly. And that space was unregulated, and I'll get to regulations in a bit. But you're also seeing similar approaches. So for example, take the startup called India Gold, which allows people to not own, but essentially get custodianship of a fraction of gold. You're seeing Ind Wealth, run by Ashish Kashyap, who used to be with Naspers in India, that's allowing fractional ownership of U.S. shares to Indians, right? So there's a shift that's taken place from ownership to custodianship, and lowering the entry barrier for buying assets, because Indians tend to prefer investing in assets. There's been a lot of talk about SaaS, and I think Chennai is probably going to be the Guangzhou for SaaS in the world. You've got Freshworks, started as Freshdesk, Zoho, Rocket Lane, several SaaS companies operating out of Chennai. And you know, many of them are going to IPO, and I'll talk a little bit about IPOs in a bit, but we need to also understand that the Indian government is very conscious of IPOs taking place outside the country. And so flipping is a reason for concern there. We will probably see regulation restricting or limiting flipping, just like there is a restriction on IPOs for Indian companies outside of India. There is a sense that if India is your market, you're making money in India, you're hiring in India, then why is it that you're not listing in India? And that's a sore point. So if you're looking at liquidity events outside of India, down the road, there could be more restrictions coming in there. So I guess everyone here should be conscious of those restrictions before you invest, or at least talk to the government about perhaps not disabling that liquidity event, because that has an impact down the road. There were few liquidity events in the last year. Zomato, Nykaa, Policy Bazaar, and Paytm listed. 70% of value has been lost over there. And with apparently the Fed restricting itself in terms of printing money, there is a sense that the 14-year bull run that we've had ever since 2008 is coming to an end. And this time it will be different from what happened in 2008. So investors that I've spoken with, founders that I've spoken with, tend to get the feeling that valuations will go down. Pre-series, pre-IPO funding is going to be very difficult to get. Late-stage investing, middle-stage investing, early-stage investing is going to suffer. At the same time, there's an increase in seed investing because many young founders have had, they've made money in a secondary, they are willing to write checks. A 25-year-old founder making $2 million is going to write multiple 20 lakh rupee checks to other founders. But that gap, where you hit a Series A, that jump is going to increasingly become more and more difficult for founders. If IPOs are going to be dead for a while, I'm not sure where returns are going to come in for, but maybe this is the time to invest. Another trend that we're seeing is the digitization of everything. And you're seeing rails being created just the way payments rails were created with UPI. A similar approach is being taken to health, to e-commerce, to education. There is a challenge there. This is government-driven rails, these are being created, right? They control the rails, they control the laws, the code, or how these rails function. So one of the most impactful and value-destructive events that's taken place in the last couple of years for the payment space, which is why in fintech there is a bubble, in payments there's a bubble, is that you have had zero MDR being imposed, which means merchants are not being charged for payments that are being made to merchants, and that is coming through a government mandate. So while UPI companies are doing well, PhonePe, Google Pay, and Paytm are three companies that seem to dominate because they have the funds to burn. There isn't much competition, in fact, to the extent that the National Payments Corporation of India, which is a private company, by the way, not a government entity, is trying to limit market share for some of these companies to 30% because they're dominating the space. But there's also no one willing to invest in a UPI service because now they're only competing with the big guns and there is no path to revenue. There's no path to revenue outside of getting into the lending space, which is again overcrowded, over-leveraged, and now I think that's also been hit badly because 2 days ago, there was a regulation from the RBI that said that BNPL, which is buy now, pay later, payday loans kinds of companies that were running, cannot operate, and they need government authorization to be able to operate. So while we're all talking about fintech over here, the latest policy seems to indicate that fintech boom is now going bust by the looks of it. Although we'll see how it plays out. It's not, it is a big challenge and it's effectively government regulation creating a disruption in business. That's not necessarily a positive disruption. While we talk about rails, one also needs to be conscious of the centralization that's taking place through these rails being created, which allow bureaucrats, government officials to dictate policy to the companies that are being funded and are getting this kind of scale after burning a lot of money. So we need to be conscious from a policy perspective about how that's going to play out. One big factor that is worrying the government is also related to consumer protection. We've seen multiple consumer protection regulations come up in e-commerce. There should probably be one related to UPI, because while we talk about 5 billion transactions, while we talk about a competitor to Visa and MasterCard, UPI has done incredibly poorly when it comes to preventing fraud. And you've had poor people having their bank accounts emptied out through UPI-based social engineering, especially people who don't understand English. When they get a message for an OTP to complete a transaction, but they're told it's a password, it's a account verification OTP, they don't know what they're playing with. And so a lot of data being available in the public domain might be good initially from an economy perspective, but that data is also being used for social engineering and fraud, and we will probably see regulations coming in there. India used to be a US versus China battleground when it came to funding, when it came to startups. That ended 2 years ago when the Indian government put a freeze on Chinese investments. One of them directly led to an IPO because Zomato, which had funding coming in from Tencent, had to rush towards an IPO, perhaps too early in its evolution, before they had a profitable business model, because they had no other source of large funding to compete with Swiggy. But you also have to look at the geopolitical impact on funding in the startup ecosystem, and if there isn't someone else that's going to buy the business, or there isn't going to be a follow-on round from a large fund, you're going to see the downstream impact of that lack of money in the market. If India becomes a US versus US battleground, that should be an interesting proposition. But from what I last read, Tiger Global, which was the other player in this outside of SoftBank and Alibaba and Tencent, isn't doing particularly well either. So a global financial collapse is going to have an impact on the Indian market, perhaps not in a 10-year horizon, but we might be in for a longish winter now. We're seeing over-regulation now. Onto policy, we're seeing over-regulation of Indian startups coming up. We're seeing it in e-commerce, where there are draft regulations waiting for confirmation, where there are regulations that are specifically targeting Amazon and Flipkart, but the downstream impact of that is going to be on all e-commerce firms. 3 months ago, we got cybersecurity regulations that mandated that any cybersecurity, every company has to have a particular officer responsible for cybersecurity. There is criminal liability for violation of rules, and cybersecurity incidences need to be reported within 6 hours of them happening, which is absolutely ridiculous because sometimes it takes over 6 hours to figure out whether something was a cybersecurity incident or not. So policy making largely is happening with the mindset, with a kind of a startup mindset, right? Roll it out and then iterate later. Unfortunately, that creates tremendous amount of regulatory uncertainty. We've seen multiple iterations of the data protection bill, for example, one provision in which suggests or states that children below the age of 18, which means 13 to 18-year-olds included, 13 to 17-year-olds included, need a guardian's permission to use the internet. And that consent and that verification has to be taken. In that kind of an environment, most of your younger generation is either going to violate the law, which is more likely, or that liability is going to come on to businesses that cater to a population which might include younger people. So as more and more people are going to come online, most of them are going to be younger. Is there going to be a restriction on their access of the internet, or is there going to be liability that companies will have to take in order to service them? So these are, arbitrary laws that are coming up, arbitrary rules that are coming up. We've seen a crazy amount of activity in the last, I would say, 2.5 years, where regulations come up without any consultation, without any warning. Look at data localization as an example. How easy is it to identify what part of a data set is of an Indian user, generated from India, and then to separate it from the rest of your data and host it in India? WhatsApp was not allowed to roll out payments for the longest time because of a data localization mandate. MasterCard was prevented from issuing new cards for almost a year for the very same reason. The RBI, which put this policy out there, which is the Reserve Bank of India, put it out without consultation, and then they issued an FAQs in order to ease up things a little bit. But now we're getting more and more regulation using FAQs. So the cybersecurity guidelines that came out 2 months ago, again, eased up a little bit using FAQs. And the first line in that document says, this should not be treated as a legal document, which means you can follow it, but it's arbitrary about whether a bureaucrat will go after you for not following it, even though the FAQs might say so. Which is, so we're seeing a lot of regulation coming in through rules. We're seeing creation of new laws and rules without going through parliament. And so this almost top-down approach of policy making, of rule making creates an environment of uncertainty in India. And I don't think startups quite know that it's going to hit them until it hits them. There aren't enough startups that are aware of these policies that are impacting them. I'm in a group of cloud service providers, Indian cloud service providers, many of them fairly small. And conversation after these cybersecurity rules came out a couple of months ago was that should we increase rates, or maybe some of us should just leave the country and set up somewhere else and service a different market, because it's becoming increasingly difficult with enforcement directorate pushbacks and raids and questions being asked for things that their clients might be doing. So the safe harbor that these businesses are typically supposed to have, and they have under law, is not really being recognized by law enforcement agencies. So there is increased harassment that's taking place there as well. I think one major change that took place in the finance bill this year was the regulation of crypto. And India has taken a unique approach. They've put in 1% TDS, which is a tax deducted at source, for every asset sale that takes place. Now, as you know, in the crypto space, if you, let's say, load up your wallet with US dollars, you buy a cryptocurrency with it, you use that cryptocurrency to purchase an NFT, each of those is a hop. Now, an Indian user has to go to a government website, file taxes, 1% tax for every hop that takes place. That immediately reduces the velocity of transactions, creates a bureaucratic burden of having to file for every purchase and every sale that you make. And apart from that, there's a 30% capital gains tax, which might be palpable, but there's also the fact that you can't offset losses in one asset versus gains in another. So what's happened, even though some of these regulations are going to get active on July 1st, what it's done is 66% decline in crypto transactions in the country. I'm in a group of some Web3 founders. About 40, 50 of about 100 of them were at ETH Dubai earlier this year, a month after the finance bill came out, looking to shift their operations and their companies to Dubai because India is unviable for them to do business in. And some of these aspects are not really taken into, there was no consultation with the crypto industry or with startups, with founders before these regulations came up. At the same time, we have companies like Polygon that have built out Solana out of Pune in India that is globally successful. And what they've done is they've leveraged a geographically neutral developer base that can work with any team anywhere else in the world, right? So it's not just Indian talent that has built Polygon or Solana, but it's an Indian company operating out of India, which might soon move out of the country as well, because they can't innovate in the country if there's going to be that 1% TDS and no offset of losses taking place. So investments in Web3 and crypto are largely going to be focused perhaps on blockchain investments rather than anything on the user side. Uh, Onto a subject that Tanvi and I are so fond of, which is tech policy. My sense is that India's got China envy. In my conversations with bureaucrats, I have heard them talking about personal data as a national asset. And there is this firm belief that data is oil. So as a country, if you believe data is oil, what would you do? Right? You would try and control it as much as possible. You would try and protect it from foreign users as much as possible. And you would try to monetize it as much as possible. So at one point in time, the department, MOT, which is the Ministry of Health, Road and Transport and Highways, was selling driver's ID data to insurance companies. And who's bought which car, et cetera, et cetera. There were about 144 companies that bought that data from them. There was some outcry and they stopped doing that eventually. But there is this belief that if there's more data flow in the market, if India retains its data and it's available to Indian businesses, there is going to be greater economic growth in the country. Which is why the privacy law is fairly weak in its current shape and form. It exempts the government from accessing data, which is a personal, which is a privacy nightmare because there's also profiling that's taking place. There's also increased regulation in every sector. So we have now regulations probably coming up for online pharmacies. We have regulations for e-commerce in terms of consumer protection. There are regulations for all intermediaries from a content perspective. Online news like us is now regulated and we have to file monthly compliance. We had to do that until someone went to court and got a stay. There is compliance that's impending. There's a crypto law that's going to come in soon, increased cybersecurity regulations. So the sense amongst bureaucrats is that if everything is going to become digital, when you have most of your population online, how can that particular government department not have a job to do in the digital space? And that job to do leads to more regulation coming in. So Ministry of Information and Broadcasting, which regulates streaming services now, and news media, would not have a job to do if there were no newspapers in the country. Of course, the traditional media organizations lobbied very hard for this regulation because they were covered, but online was not. But bit by bit, you're seeing vertical regulation coming in India. There is quite clearly a very strong fear of digital colonization. And that has to do both with foreign money, and especially from countries like China, but also to do with foreign companies operating in the country. So your Google, Amazon, Facebook, big tech are increasingly at the receiving end of government pushback and government regulation. I'm sure Walmart probably regrets buying Flipkart, but if you're not going to see those exits downstream, how is that going to impact the funding environment is something to consider. And the broad belief is that because data is oil, we need to keep all of that data within the country, which is why in every policy that we are seeing, there is one line somewhere that refers to data localization. The cybersecurity regulation says that data for logs for Indian users need to be kept in India and stored for at least 180 days because law enforcement agencies want access. What's coming up next is probably the data protection bill sometime this year, maybe in July, maybe in December. You'll get competition regulation at some point in time, more data localization, cloud regulation, more payments, e-commerce, and crypto regulations will come in. And you'll also see more stacks and more rails coming up for enabling the ecosystem, even though things like zero MDR have destroyed business models for many payment startups. I'll stop there in case you have questions. I'm happy to take questions. I didn't want to sound too pessimistic, though, but this is what I'm seeing up front and close.
Yeah, no, absolutely. I'm Kishan Bulusu. I'm the founder of Bot Price. So I think my question is something which I asked the earlier panel, right? Based on all the things that you are seeing, and like in the context of Tanvi's like 4 pillars, right? Do you see India ready for a 10x growth? I know the excitement in startups and all that. I've done startups all my life, so it's very exciting, right? But from where you are, right, do you see India primed to grow 10x over the next 10 years or even 20 years?
I see a lot of Indian founders wanting to move out, which means that it's likely that India might not see 10x growth. At the same time, there are founders that want to stay in India, and they might end up growing quite a bit. But the 2 ways to look at it. One is the B2B side of things, where you're building in India for the global market. That's definitely going to grow. But if you're building in India for the Indian market and you're serving Indian customers, broadly the kind of bureaucratic restrictions that are coming in and look like they're going to continue coming in are going to be extremely restrictive. The consumer story is great. The consumer story is there to be, there to build products around, but think about it this way, right? Technology is also very political now. WhatsApp is the biggest media company in India, right? Video is consumed more on WhatsApp than any other platform in India. Elections are impacted by WhatsApp. And in that kind of an environment, you're going to have more regulatory control over how businesses function in the country when they're targeting consumers. But also because tech is increasingly more and more geopolitical, where India is not signing international agreements over data transfer across borders and trying to create an environment where more hosting happens in India while creating a regulatory barrier for those hosting services. I think it's almost always the case of, the left hand doesn't know what the right hand is up to. And as someone said on a previous panel, there's a need for a task force that looks at things from a holistic perspective. The potential to grow 10x is there. It should be easy to do 10x from here. But it's difficult for the bureaucracy to let go, right? And they're losing control because they don't have control over the internet. And that lack of control, if you're arguing with them to institute a lack of control, then you're arguing against them doing their job in their minds. And no man is going to do something that basically reduces his importance in that space when you're a regulator.
Yeah, the other follow-up is like in India, we used to have a lot of this chronism, right, in terms of helping all the reliances of the world and all that. How prevalent is it still there? Because I believe that is like the #1 stumbling block for India, right?
You should read up on what's happened with Amazon and the future retail deal in India. That is by far the most blatant instance of, the kind of impact that a large player can have. And Amazon was ready for a fight. It just didn't realize who it's up against. It's there in every sector. You just have to see which industrialists are getting into new sectors at a very fast pace. And look, we've heard about success stories. Look at Big Basket and its acquisition by Tata. Look at 1mg. I don't know if investors made money on those deals. So you will also have conglomerates coming in and buying businesses that have been funded, have tried to scale, but not been able to. But they'll come in and just buy an asset that may fit into a larger model, but isn't necessarily going to be an IPO, isn't a company that's going to be in an IPO space, right? And everyone that's in a regulated space especially has had many, many challenges. UPI killed the wallet ecosystem. The wallet ecosystem got fairly restricted by regulation, but regulations have supported UPI. So it's what the regulator wants that also determines your future, not just crony capitalism. You look at what's happening to card payments in India with recurring payments, with card on file, where merchants are not allowed to store your credit card number starting July 1st. Massive disruption going to happen in the payment space. Recurring payments, many businesses are not servicing India anymore, at least when it comes to credit cards. Apple is not allowing Indian credit cards anymore. Why are these things happening? From a regulatory standpoint, what does this do? It was, I think, a month after the UPI standards for recurring payments came out that the Reserve Bank of India restricted recurring payments put out a notice saying recurring payments on credit cards are going to need a differential approach. So very clearly, the Reserve Bank of India is trying to give a fillip to UPI at the cost of credit cards, which means that your regulator is determining market conditions and not allowing a level playing field, but favoring one versus the other.
But this sounds like a task force, right? It's actually doing it across the traditional regulatory framework.
Yes, it does seem to be very coordinated. We're also seeing I think we will probably see something similar happening in health because it's the same approach. Centralized rails like UPI, like health stack, there'll be something around education. And then the market conditions are changed so that these rails benefit versus other business models. So if you're in the health tech business or if you're in the edutech business and you're not participating in that rails ecosystem, you're probably not going to be able to win. Which means that effectively you're either being forced onto those rails and some part of your business model is being determined by the regulation and the tech stack that is getting created, which means you don't really have the freedom to innovate, right? Where is the innovation in payments beyond UPI? Are we talking about innovation from Google Pay, from Phone Pay, from WhatsApp payments, from Paytm? We're not. Because they're the same product. Why are they the same product? Because they're on a centralized rail called UPI. Any innovation that's coming in is coming in from UPI, which is coming in through a government mandate. So if you think that your startup is going to compete in the health tech space, but do something completely different from what is planned for that space, you're not going to win. Similar rails are getting created with ONDC around e-commerce. But if you're not a part of that entire construct of ONDC, you're going to struggle in e-commerce in India. Because all forces are going to focus on making those government rails for ONDC succeed. Or rather, government-approved rails for ONDC succeed, right? So I don't think many startups see this coming up. They don't necessarily understand the way this is shaping up, but it's going to hit them at some point in time, is my sense of it, right? I know founders who were looking at health and starting at something. A friend of mine was looking to start something in the health tech space, gave up because he wasn't in that group of people that was planning out the health stack, and he realized that the innovation would not be in his control. There is no innovation in Google Pay, Phone Pay, or any UPI app today. They're not allowed to.
So this is Ashwin Radia. So how is the regulation structuring all these things different in India and China? You may not know China that much, but I mean, China is also very regulatory, right? And in India now it's coming up. So how are they different, similar? Maybe you or others can comment on it. I don't know.
Well, one of them is a democracy, and I think that's India. And so there is still some opportunity for pushback. There is still some opportunity for trying to evolve regulation in a manner in which public participation is enabled. For example, yesterday there was a discussion on the new IT rules, for which there is a mandate for creating a government committee. I've forgotten the full form. It's called the GAC. That all intermediaries, which are platforms, are going to have to be a part of, and government directives will have to be obeyed, given by that committee. Right. So, at least there's public participation that's being allowed there. When we were regulated as media, as news media, there was no public consultation. It was just a gazetted set of orders saying you have to appoint a chief grievance officer, take complaints about your news articles from users. Someone can complain to the government and get your article taken down. Those sort of structures were put into place through that, but we didn't have an opportunity to push back, which is why some media publications went to court and prevented it. For me, the problem is more about how these policies are getting created, and they're almost coming top down. And I'm seeing that China has this fairly similar approach. Especially in speech regulation, we're not there. But if I draw the line, I can see that we might be there 5 years from now. It's just the control that's exerting. India has China envy in terms of what the government, how much the government can control the tech space there. It can't control it as much here because A, it's an open market, B, it's a democracy. But I think Ravi Shankar Prasad spoke about it 3 or 4 years ago, saying that there is the China way and there's the EU way. And we're not going to go, we will find our, so there's a US way, EU way and China way. India will find a fourth way of existing. My sense is that that fourth way is closer to China than it is to the EU because of just all the regulations that I'm seeing.
Thanks, Nikhil. As always, I learned a lot. But I will, just a couple of comments, and then I have a couple of questions for you, Nikhil. I mean, one of the question of where India is ready. Nikhil and some of the work he's done is a perfect example of, and also how it's different from China, where there's no straight line, linear path this is going to take. There are ways that even government, this one, previous one, has changed its mind. And the two examples I'll give you, one was India's approach to cyber governance, which because of its traditional way of thinking and when the rules were being set and thinking about it from a government, the knee-jerk response was, especially from government, that India should be part of this. This was this debate about whether it's multi-stakeholder versus multilateral. States should dominate and speak for versus, you know, what the U.S. and Europe, et cetera, were saying, which should be a multi-stakeholder model. India initially went to the multilateral. But there was work done to then explain to the government, and itself saw that India actually isn't like China and Russia in terms of even tech and consumers and business. And it moved. It moved to a multi-stakeholder model because it realized that as much as it has China and Russia envy and thinks about things like, you know, the other thing we don't talk about is speech, et cetera. But Indians themselves have generally chosen things like security over privacy. For various reasons, and some understandable ones. And so, you know, I think getting out of the mindset, it's not that government can't change, and part of the advantage of a democracy is that they are those interventionary mechanisms. Not perfect, but they're there. So I think that's one example. The second, and Nikhil perhaps can talk about this, is the debate over net neutrality in India, which left to the government would have probably, and American business and big Indian business together all working in one, it went in a very different direction. So I would say it really, when you ask the questions, where will India be? The question is, what are the decisions made in the meantime? And those decisions are shapeable. The question will be for the Indian government, democracy is one thing they do is they do have the ability to self-correct. Does the Indian government see that it's meeting its own goals with the approach it's taking? And if it thinks it's doing well enough, it will not self-correct. But if it starts to see you know, this startup kind of environment that it's trying to create, people choosing to go elsewhere, you start to see kind of not the kind of exits that they want to see, you might actually see them think differently. Or if they see that they're not taking advantage of the window of opportunity that exists with kind of the environment. And we've seen this, for example, on trade recently. The question is, do they actually move? This is a much more sensitive area, particularly because of data and how people feel, the kind of desire for national champions and things like that. But even with national champions, the Indian government eventually gets worried that there's going to be a monopoly created and then tries to create competition with various national champions and others. So I think it really depends. It's not a straight line, linear kind of movement. It could go and think scenarios, not forecasting. And it really depends on the decisions that will be made. Second thing I was just going to say, and sorry for Billy, you're going to see more regulation everywhere. Some of it will be smarter, some of it will not, for the reasons Nikhil said. Geopolitical developments, but also because data and tech is sensitive everywhere politically. They are now media, they're now communication. So you're going to see regulation everywhere. It's not just going to be the EU, it's not just going to be India, it is not just going to be China. It is going to be here as well. And that's just something, this is why, you know, while the policy folks come and be pessimistic, and it's actually great to hear folks be really optimistic, I think that conversation has to be much deeper, and it's great that Asia Society is doing this. The questions for Nikhil.
Can I just address a couple of points that you
made?
Yep,
and then, well, let me throw in my question so I can give the mic up, and I'm not monopolizing it anymore. Two questions. Into tech, one of the places we were seeing capital go into India from obviously the West, but also we'd started to see from the Middle East, particularly some of the sovereign wealth funds there. They might actually be flush with cash now for the next couple of years. Are you going to see that trend continue? And Middle East, I don't just mean Israel, of course, but the Gulf states. And second, cybersecurity. You mentioned kind of the concerns. Is this potentially an area actually for opportunity as well as India thinks about things like critical infrastructure protection, thinking of cybersecurity solutions, including with partner countries? It is a boom area in the government-to-government space. Could this be an opportunity? Or is this, again, likely to be an opportunity? But yes, but for Indian business and not kind of the U.S. India corridor space.
So I'll address your questions first, and then I'll come to the comments. In terms of capital coming from the West and the Middle East, that might be one opportunity for India to get money, because Chinese money is not going to be available. It's not available anymore. SoftBank perhaps has been burnt quite frequently in India. They might not be in. So if there is hope for there to be capital for the next 3 or 4 years before, IPOs begin again and companies are able to scale, probably going to be from the Middle East. I haven't seen much coming in over the last 6-8 months, but there's an opportunity there, especially now that we're having down rounds and valuations have dipped. We might see them coming in. In terms of cybersecurity, we're not seeing any encouragement for cybersecurity companies so far. If anyone's building something, it's out of their own volition. We'd like to see venture capital coming in that area, because you and I know that this is a boom industry. It's exploding globally because of the number of incidences that are going up. But I don't see anything coming in from a government perspective. They are also creating opportunities with the kind of regulations that are coming in, just in terms of managing data protection, managing data. When there's criminal liability, then obviously companies will start paying for some of those services. We still don't have a cybersecurity policy since December 2018 when the consultation began. By now, it's probably already outdated. So not much movement on cybersecurity, unfortunately, apart from these rules that came out of the blue. And that's actually the point that I wanted to make. What worries me, I've been looking at regulations for years now, right? The net neutrality campaign that you mentioned, I started that campaign, the SaveTheInternet.in campaign, and ran it. I took a sabbatical for a year, ran it, and we won because we, by design, brought in people to battle businesses like Facebook that were trying to violate net neutrality in India, but also mobile operators like Airtel, which really put a lot of money and weight behind trying to defeat us. And the logic there was that if we bring in votes, votes will beat money. And the scale that we reached with about over 2 million people writing to the Indian government directly to support net neutrality, and many MPs receiving mails via our campaign, some 20, 30,000 mails that some MPs got, helped us sort of get net neutrality, the strongest net neutrality regulations in the world. I had said then, and I still believe that it's not going to be possible for that campaign to be repeated. But what we've seen is that, with other issues like Aadhaar, the data protection law, the attack on end-to-end encryption, the government is building narratives in advance, and it's essentially pushing its way through. The cybersecurity rules that came out 2 months ago are impractical, they're not workable. But the ministers dug in his heels and said that we're not moving on this. This is what it is, you've got to live with it. And we might look at something a few months down the line about whether the implementation is working or not. With data localization, the RBI did not move. With the IT rules last year, they were clearly unconstitutional. Rules cannot create definitions and be used to impose regulations. The definitions have to come from the law, and the rules have to draw from the law. But in this case, they made a new law just by passing a rule and bypassing Parliament, right? So when you look at 4, 5, 6 policies and you see similar things happening, they're ruling by FAQs. They don't do a consultation, they just issue a diktat and say, you need to comply. And then when there is an uproar, then they issue FAQs and relax a little bit, not enough. And that relaxation is also not legally binding. So I think that for me is more worrying, that we're not following the democratic process of tech policy lawmaking. And if that continues, then there are more shocks and surprises, and therefore I think the uncertainty should scare people in this space. Same thing happened with crypto. Finance bill, suddenly these 3 things that completely disrupt the Web3 and crypto space in India popped up. Now, everyone in Web3 is saying that we don't know what's going to happen next. So let's build outside of India, because this government is unpredictable. You're going to see entrepreneurs leaving soon. Many have already left, many more are leaving. Some will come here, register in Delaware. Some will go to Dubai, some will go to Singapore, some will stay. But I think that the flight of entrepreneurs should be worrying, and that's something that the government doesn't seem to have taken into account, from what I can see. Sorry to paint such a bleak picture, by the way. Questions?
How do you compare the regulatory environment with...
Can't understand what you're saying, sorry.
How do you compare the regulatory environment with other regional countries, such as Indonesia, Philippines, compared with India?
I honestly haven't done that comparison. I have done a comparison with the EU. I did a presentation on India tech policy trends to 25 odd delegates last month from the EU. And my basic message was that India takes EU laws and makes them worse. And I had data, I had exact clauses to compare. Small examples, social media regulation. In the EU, the definition of a social media platform, in Germany, in the NetzDG, the definition of a significant social media platform for which there are greater regulatory compliance requirements is 5 million. Now, 5 million for Germany is a high threshold, which is how it should be. India copied the same number and put the same restriction. And the definition of a significant social media intermediary is such that technically, payments companies in India are significant social media intermediaries. Now, it's only arbitrary that it's not being imposed on them, but by law it is, by the looks of it, right? We took what the draft Digital Services Act in the EU had copied bunch of those clauses and made the IT rules last year. Amongst those was the requirement for a chief compliance officer that every significant social media intermediary needs to have. In the EU, it's just there. In India, they gave that compliance officer criminal liability, which is why there was, which was an outcome of a face-off between the Indian government and Twitter, because allegedly the Indian government was asking Twitter to censor accounts of journalists and news publications last year. So they brought in criminal liability because now every social media platform will have to comply with those diktats. So I don't have a comparison with Indonesia and other countries, but what we're seeing is we're looking at the EU for direction and then seeing how we can modify their regulations and copy some of them and, you know, bring in more compliance requirements on top of that. So you had a question.
My question has nothing to do with this, but it's a tech policy question. India seems to be going heavily in favor of trying to build a semiconductor infrastructure, and all sorts of new SOPs and subsidies, et cetera, are being done. Also, in a very dynamic global environment, the changes in Hong Kong and the movement of technology from Taiwan, Hong Kong, and all, how do you foresee any of these effect? Because they're apparently now they're pouring in a lot of money. Are there any hidden pitfalls in their policy that we don't know?
My sense is that companies are going to be cautious about setting up in India because we don't know how long this rosy period will last. Experiences that many global companies have had in India are not that great over a period of time. You know, even in terms of manufacturing of devices, most devices are not being manufactured in India. They're being assembled in India. But we're quoting that as a growth in manufacturing. We tried to attract Apple a few years ago as well. And I think there was some issue with the issue between the U.S. and China when Trump had stopped Android updates and all of those things popped up. I don't remember the exact issue then. That time there was a strong move from the Indian government to try and bring companies to India. Some of it has borne fruit. I think Apple manufactures some or assembles some iPhones in the country as well. Honestly, I don't look at the semiconductor industry much to have clarity on that. Last question right there. Just take that.
So as you mentioned that some founders moving out or they are trying to build outside, do you also see an increasing trend where India-based funds are putting money outside, especially the early stage or Series A, whatever? Have you seen that?
In India, funds have invested outside in the past as well.
But increasing trend, have you seen in lately?
Honestly, I don't follow the funding ecosystem much. I used to cover all of that until about 4 or 5 years ago. We pivoted to focusing on tech policy. That side is actually a much happier space to look at than policy is, to be honest. But so I don't know much about that. But thank you all for listening to me. I hope this was useful. Thank you. And thank you, Asia Society, for this. Thanks.